Welcome back to The Urban Monk. This is Dr. Pedram Shojai. Excited to be doing a follow-up on a story that we covered pretty extensively a couple years ago. Obviously, for those of you who are familiar with my films, we did a film called Prosperity back in 2016. It was all about conscious capitalism, how we vote with our dollars, what you do in the economy does matter. And we followed that premise. And, if you haven't seen the movie, go see it. I'm not going to go repeat that year's worth of work. But one of the key figures in that was a gentleman by the name of Martin Whittaker, who had started a firm called Just Capital. We started at pretty much at the inception of that work. It was early days, very exciting what they were doing. It's been a couple of years, and I got to say, a couple of the conscious banks, a couple of the funds that we had looked at, that were very exciting, are no longer with us, right? So it doesn't mean it's called capitalism, right? Some things survive and some things don't. And I'm happy to report that Just Capital is alive and thriving and doing all kinds of cool stuff. So I wanted to invite Martin Whittaker, the CEO, back on to catch up and talk about what we can do to make the world a better place through the money we spend. So Martin, welcome back.
Pedram, thank you. I'm excited to be back. And indeed, the world is steadily and slowly becoming more just, I think.
That's an amazing statement, because I think a lot of people who watch the news on any side of the political spectrum are being fed a lot of information that makes them feel like the sky is falling. Right. There's a lot of stuff happening with the EPA. There's a lot of stuff happening with the current administration and, crony capitalism. And, it's not like all that stuff went away, but there's this other conversation that is getting louder and more interesting that isn't making as much headway in the mainstream media, or at least for people who aren't, knowing where to look and, what headlines to go fish out. So let's expand on that. Like, let's talk about the good news for a minute.
Sure. Well, sorry, go ahead.
No, I was going to say, I was going to give you a little bit more of a segue there, which is, you are watching this. You have your finger on the pulse of a lot of these companies that are doing unbelievable stuff. It's not only are they reporting to you, you are putting them into your metrics and kind of reporting that back to the industry. So I'll step out of the way and let you start.
You're absolutely right. I think there are reasons for optimism, and you said it perfectly. We are, fed a steady diet of very divisive, polarizing news politically and socially. And I think one of the things that we've been able to do now, we've been surveying the American people in great detail about, their attitudes to business and their attitudes to markets and capitalism. And I'm personally heartened by a few things, and there are reasons to be optimistic. And I think the reasons for that are as follows. Number one, we sense that the American people are united in wanting businesses to be better. We don't see a huge amount of difference across different demographic groups, income, ethnicity, location in the country, or by age even, around what really matters and what's important. And I think there is a deeper set of values and a deeper sense of purpose that unite us all. And we want markets that better reflect that. So I think that's a reason to sort of think that if we can begin to sort of enact that we can start to build a market that works for more Americans, which is the Just Capital mission. So that's the first thing. I would say the public sort of wants business and companies to be better. Certainly people believe in markets. They believe in capitalism as a potential force for good. And the other thing that's changing is that I think companies now more and more want to be better. And you see this with the leadership of individuals like Mark Benioff at Salesforce. You see it with the announcement back in the summer by the Business Roundtable CEOs that they were rejecting 40 years of shareholder primacy to embrace instead a stakeholder model that says the purpose of a corporation is to create value, not just for its investors, but for all of its stakeholders, specifically its workers, the communities where it operates, its customers, the environment, its suppliers. And so, I look at that and I say, okay, well, maybe we're not that far apart after all. You've got a public that wants business to be doing more of this. You've got company leaders saying, we want to be better at this. And so now what we have to do is figure out how to actually get there from here. And I think that the political divisiveness we see is obviously a function of the fact we're in, we're in an election season. We have no matter what your politics, we're just in a very volatile political environment. But what America, can rally around is this idea of people wanting a hand up. They wanted a fair shake. They want the idea of the American dream to be alive and well. And so I think all of those things are possible. And it's not easy, but I certainly can see, through the mist, the potential to grasp that.
So there's, everyone can say, hey, look, I want the world to be better. I want to, support things that support the environment. Where the rubber hits the road is I'm walking down the aisle at Target or Walmart and two products side by side. One is cheaper. How do I make how do I make a better decision for my family financially and yet, play this game? And I think that's where, kind of self-interest versus this kind of enlightened global interest has been a little rocky, right? What are we seeing in terms of market dynamics and kind of, prices adjusting and or whatever that would help that buyer actually make the better decision?
So that's a great question. You are right down now what you might call the point of sale, right? The point of transaction. And by the way, that would apply to people looking for a job. It would apply to people investing. It would apply to people in companies saying, I want the workplace to be better for me. So it also applies in advocacy and activism, where how do I spend my time supporting issues and companies? So that moment of decision is really what counts. And what we're seeing across the board is more and more people wanting to work for, buy from, invest in, support companies that are more aligned with their values and doing things well or avoiding doing things poorly on things that really matter to me personally. And I think that sort of activism, if you will, sort of democratic activism, is on the rise. You see more and more consumers, being aware of how the actions of the companies that they're purchasing from and being able to adjust the way they act as a consumer to reward and punish based on social issues, social positions. Likewise, investors, there's something like, there are trillions of dollars, $3 trillion focused on environmental, sustainable governance, sustainable investing, impact investing, mission investing. That number has been growing at a rapid rate, and more investors want to invest along those lines because it's good for business. Actually get better returns in companies that treat their stakeholders well. And you definitely see more and more job seekers, looking at the broader picture of a company. So I actually feel that what's missing here, and this comes back to the Just Capital mission, is you need the information. Without that data, you're walking down the aisle, to use your example, without that information on whether companies are doing well or poorly on the things that matter to you, you can't make that decision. And so that's the problem that ultimately Just Capital is trying to solve. We're trying to make it easy for you to know which companies are doing well on the things that you care about.
So let's talk about the index. I know we mentioned this in the film, but it's been a while, and got a lot of new listeners. What criteria, like what data points does the index take in? Because I'll look at this and be like, well, a lot of your top ones are they're tech companies, frankly, right? So it's like, well, how the hell are these guys just? I would think it's some sort of I don't know, some healthy manufactured organic food company, or you know what I'm saying? And then there's all these other criteria that are looked at. So what's the filter?
So the way the index works is we basically took the best companies, the top half of companies in every industry, and put them together, and that tracks the index. It's actually pretty simple. Our methodology looks at how a company treats its workers, how a company treats its customers, the nature of the products that it makes. Are they beneficial to society or harmful? How a company is supporting communities where it operates, supply chains, human rights issues, the environment, and also does it make money? Is it well managed and well governed? So we look at dozens and dozens of specific things underneath each one of those areas. We rank companies in each of those factors, and then we combine all of that in an overall ranking. So what you get, if you came to our website, justcapital.com, what you'll be able to see is any company and compare it to any other company on any issue that you care about. But for the index, what we wanted was something that sort of captured the essence of, the overall mission. So we took the view that, we're gonna take the best 50% of companies in every industry, put them all together. So you've got something like 450 companies across all sectors together in the index. We've been tracking that now live for almost 3 years. It's outperformed its benchmark, the Russell 1000, by about 400 basis points. That's about 1% every year. And we want to market that to investors, and we licensed it to Goldman Sachs, and they launched an ETF, an exchange traded fund, on the New York Stock Exchange in summer of 2018, and there's real money being managed against that. But that's one product, and we have a lot more that we're developing where. We hope to attract, more investors so that they can actually begin to support companies that, are doing well on all the things that we measure.
Let's go back to the promise of this. So what the premise and the promise is that companies that are having more sustainable practices, that take better care of their workers, that basically rank high in these categories, are better for business and are better bets long-term for investment. And I saw that headline not too long ago that, Goldman has jumped in and now they're doing, kind of a sustainable impact fund of sorts. Is that what you're talking about specifically? They're using your data as part of their investment criteria?
Yeah, exactly. I mean, it's not just Goldman. There are other companies doing that. But yes, Goldman is what they basically took the index that we launched and formed a product out of that, and that's what you see if you go, if you go to the Just ticker on the New York Stock Exchange. That's what's trading. But exactly right. It's meant to be just a vehicle for investors to get exposure to that particular index.
Okay, so let's dive in, because I'm looking at this right now, and Microsoft is ranking super high in all of these. And so first, I want to say I think these are publicly traded companies. These are large corporations, because you could have a mom and pop essential oil shop that is probably really nice, but we're not talking about things that are showing up that are not showing up on like large markets and indices, right?
Correct. We're focused explicitly. Our strategy is to target the big corporations, because we see if these guys are like big ocean going liners, right? Like they don't turn quickly, but they carry a lot of businesses in their wake. They're through their suppliers. They affect millions of workers and hundreds of thousands of communities all around the world. So if you can shift them onto a slightly more just course, if you will, you can have a huge scale impact.
So Microsoft's overall score is 71.8. They're doing really well with their workers. Worker pay and treatment are at the heart of the business practice. 75% percentile, I guess, of customers. Products are lower. They're 32 in terms of high quality, but then they're getting an 87% or 87 weight, whatever that, how do you explain that, in environment? Can you jump into, and again, I don't want you to jump into something that you're not prepared to answer, but can you jump into why they're doing so well environmentally? Like, are they buying credits back? What are they doing that makes them so good?
Well, a few years ago, they committed to being 100% carbon neutral. So they have done a huge amount of work to actually reduce their carbon footprint. And I don't mean purchasing offsets, but I mean investing in projects that are, essentially transitioning the world to a lower carbon intensity future. So not just in their own operations, but through their products, they've been applying. They've been doing a lot of work on clean energy, and especially in solar. They had a very aggressive renewable energy target for their own usage. They've been extremely strong on waste management and recycling, not just packaging, but also electronic waste. So they've taken a number of concrete steps that, relative to not just others in their industry, but others in every other industry that are, exceptional. And we feel like that's worthy of the number one ranking.
So let's follow this through with my audience, because this isn't like, I'm not an investment podcast, right? Like, these aren't, obviously I have people that are much more savvy in markets and all this kind of stuff, but let's follow this in a layman's terms through to what it does in terms of ripple effect into the economy, and why rewarding Microsoft with, investment dollars and all the things that would come with these indices, ranking them high and putting money into them, what that does to the overall economy over time.
Sure. So this strikes to the heart of our overall thesis. The basic idea is, if you think that markets have an important role to play in solving our social, economic, health, environment, education challenges, then you have to try and provide incentives and rewards and punishments, if you will, based on a company's performance. I mean, we do that financially. So why shouldn't we do that for performance on other issues? And the idea that, this is not to say that policy and regulation don't have a role to play, but for just capital strategy, we want to provide the incentives for companies to be better at treating their workers, to be better at managing and reducing their environmental impacts, to be better at investing in communities in this country and around the world that need that support. And so we want to use market forces to incentivize positive action on those issues. And so the first thing we do is, just to take it right back to the beginning, we ask the public, what are the issues that matter to you? So we didn't decide that the environment or workers or communities or fair pay or, gender equity were important issues. The American people did. We've had 5 years now of very detailed survey work that's created a framework for all the issues that the public prioritize. That's what we measure companies against. Our research team then gathers data and provides the best possible sort of unbiased ranking and analysis of how all these publicly traded companies are doing on all those issues. And our hope is that if we can package this the right way and have enough influence over how investment dollars flow, consumer spending flows, how talent enters the workplace, et cetera, that all of that together incentivizes the leaders of these big companies to begin to take action. And that has a really important role to play in a free market economy where we value things that right now are just not being pursued, either for a lack of data and information. In other words, people just don't know, and they otherwise they would take an action if they had that knowledge. And that ultimately, over the long term, these things also support better business performance. Investing in your workforce reduces attrition. It helps create a more loyal, well-trained workforce, which translates into higher employee engagement, which improves productivity, which improves customer service, which improves customer loyalty, which grows pricing power, which increases your operating margins, which ultimately produces a stronger brand, that sort of reflects the values of the society that it serves. And I think that all of that is what we need to do if we're really to have a healthy capital markets, for the next generation. So that's how the market theory works. And one thing that we really must do if that's to become a reality is you have to measure impact and you have to measure progress. It's not enough to say these things. We actually have to know, is Microsoft making a difference? Are they actually reducing their environmental impact? Are they actually moving towards 100% gender pay equity? And that's our job. We measure those things just like any company, just like Bloomberg might measure, a company's profitability. We're out there measuring justness. And ultimately, if you can bring these new metrics and these performance analysis to the market, and Americans want to use that data, then it creates this race to the top. And that's the theory of change.
So this is, your central premise is obviously right on par with what everything that you're doing here, and you've been proving out the model. Now, I just want to kind of speak to how much of this is speculative and how much of this has already been established. Back in 2016, I was interviewing, the founder of Calvert Investments and a number of them, and back then they were saying, "Listen, the writing's on the wall." It just makes better business sense to do these things. And, a lot of the people that we interviewed for the film felt like that had already been established. What's the sentiment amongst, kind of the investment community when it comes to impact? Is it still this kind of cutesy little theory out there, or is it pretty much been embraced by the science and the scientists and the data scientists that have been looking at this stuff?
So I'll be honest with you. I think there absolutely is a lot of information and a really credible analysis, stretching back over 25 years, that makes the business case. However, there's still a lot of skepticism and a lot of cynicism from mainstream markets, and including, from companies that are embracing this thesis about, is this really moving the needle? Are we actually, driving positive change? Is this just, marketing? And also, it's not easy. It's not, if I knew how to beat the market, I'd be doing this podcast from my 150-foot yacht in the Caribbean. So it's really not that straightforward. So I think it's appropriate to really be intellectually honest about this and say, there is a business case. We need to unpack it. We need to understand it. We need to figure out really what drives causality. In other words, what's just a correlation between leadership on these issues and better business performance, and what's causing better outcomes, and what's causing better financial performance. And by the way, are the outcomes actually helping people? Are we solving real social and environmental problems with this sort of line of thinking? I think the jury's still out on a lot of that stuff. Are we solving climate change? By investing in companies that are being proactive on climate risk management? Not really, and we're contributing to it for sure. And these companies, many of them are taking extraordinarily leadership positions, but everyone can be doing a lot more. And it's not a panacea either for the underlying issues. So I just think there's more complexity to it, and that's probably why you get a lot of criticism. But I certainly don't think that this is a done deal yet. There's a lot of people out there who are confused by, well, what does ESG and sustainable investing even mean? How do I do it? How do you measure success? So no, I feel like this is very much a journey, and what's actually needed now is probably a simple, popular platform, a bit like Bloomberg, and actually Bloomberg's been doing a lot of good work in this area, but something that really begins to create convergence around a framework that businesses and investors can all get behind. And then it becomes, the norm to do this, not the exception.
We live in pretty interesting times when, you and I are having this conversation and there's traction happening in ESG and impact investment. And at the same time, we're fracking the hell out of, the North American continent, and we have a glut of oil. I mean, a couple months before this recording, U.S. was the biggest net exporter of oil for the first time in, very long time in the world. And, enough so that it's, driving a glut in plastic, and all sorts of things are being made out of plastic now. We just did a episode on this. So, here we are, big business, big oil, petroleum dollar, all sorts of geopolitical considerations with stability and all that, which are also business, right? And so how do you get airtime in an environment where, it's a free for all, and businesses, getting to, a lot of the governors are coming off, if you will, and, environmental controls, and it's become a very, pro business, time in the administration, obviously. But there are a lot of the things that you guys are measuring aren't on their scoreboard. So how do you get in front of people, and how do you still convince people that this is the right move?
Well, you're absolutely right. This is it is a complex environment in which we're operating. But I think at the end of the day, capitalism itself right now is sort of on the psychiatrist's couch. Where we've realized that 40 years of shareholder primacy is not working. Income inequality is rampant, making all of our social, economic, environmental problems worse, not better. And we need a new way to think about the system. And we don't want the pendulum to swing too far the other direction. I think business in this country is looking for a new North Star. And I would say that you could say the same of those, politicians, those in civil society who recognize that business has a crucial role to play in building a healthy society, that we need a new North Star. And so that I think is possible. And I think this idea of a stakeholder economy where we value how a company is serving all of its stakeholders, as embraced by 181 CEOs of the country's biggest corporations, that I think can be the new North Star. And so I would think about it in those terms. This is about creating a vision where the majority of us can buy into and begin to measure progress. So whether you're, no matter, what's your particular point of view, we know that model appeals to the vast majority of the public through our survey work. We know that companies want it. We know that more investors want it. I don't hear a lot of support out of Washington, I'll be honest with you. I don't hear a lot of vision coming from the Republican or the Democrat parties around this vision for capitalism. But I think it exists, and I think it's right there. And I think that can cut through a lot of the noise and be something real and tangible and rooted in, what this country was founded on, which is a belief in sort of, individual rights, and the idea that, I can build a better future for me and my family, no matter where I come from and what my background is. So that is universal, and I would always bring it back to that central message. So that's why I think we have a shot right now, and why I think the complexity you referred to is always going to be there. But if you've got that North Star guiding you, at least you know what direction we're trying to go in.
Yep. Now, I know you don't have a crystal ball, obviously, you'd be on that yacht, but the idea of, we talk about climate resilience. What about bubble resilience? There's a lot of people that say, look, we just kicked the can forward in 2008. The pensions are in trouble. They're putting their money into junk corporate bonds that are losing their credit. And, there's trouble right on the horizon for economies that have been using central banks to basically keep cheap money in circulation. And, things might not have the fundamentals that a good kind of capitalist or good economist would want to see in the global economy, not just America. Is there any data to suggest that the companies that are following these types of principles are more resilient and, less likely to bust should there be, significant movement in the markets?
Well, that is a great question. And, I'll come back on in 5 years' time after we've been through, a cycle to be able to give you a better answer to that. I would say, it's interesting when we look across the top companies in every industry that we rank. It's a real mix. You've got 100-and-odd-year-old brands there that are still renewing and revitalizing, and are obviously, self-evidently resilient and really capable of building for tomorrow on repeatedly. But you've also got brand new companies. We've got companies that are new. You referenced some of the tech companies, but we're about to reveal this year's rankings, and there are some companies that were founded only a few years ago and have only just gone public that are going to be highly rated in the Just Capital framework. So I do feel as though there are companies that are just higher quality, more durable. I go back to some of the things I said earlier about, a natural resilience of a company that looks after its workers well, looks after its customers well, is better serving the communities where it operates, better relationships with its suppliers, and is more sort of, ethical and, has a leadership with greater integrity. Those companies probably going to do better. Are they going to do better over the long term? Are they going to do better in a downturn? I feel like that's just good business sense. I mean, that's what they taught me in my MBA. And I think anyone who knows anything about business will tell you that that's the key to a successfully good business. Every company is going to go through, good times and bad times. Every company is going to go through, regional and global recessions. And I don't see these things as being luxuries. They're going to get tossed overboard the minute times get tough. In fact, the opposite. I think that when times get tough is when you fall back on your core sort of beliefs. That's been my experience. And the CEOs that I talk to of these big companies say the same thing, that, the markets want shorter and shorter term performance. That's a problem. But the really smart investors, the pension funds you talked about, the CEOs that are trying to build for the long term, they're falling back on these core values. And I think those are going to be the most resilient companies. And, time will tell. But my sense is that this is a protection from volatility, not just a way to sort of, capitalize on a current trend and we'll sort of jettison these ideas the minute the going gets tough.
Yep. It's interesting, like famously one of the, so United Airlines famously chunked it on their pension plans and, basically, had their pilots take a bath because the money wasn't there and all that. And, I'm looking at their ranking and it's not very high, right? It's very, ranked 503 out of all the public companies. And I think their lift comes from, some of the things that they are doing better. But it's reflective, right? And how you run your company matters. And it's just like the fundamentals of, your P&Ls and a balance sheet of any company. If these other metrics, like how you care for your customers, how you care for your workers and the environment, these things that people are actually telling you matter to them, these things show up on the scoreboard and we measure them, eventually, effectively, we've kind of nuanced our capitalism into something that is much more reflective of our ideals. So, I mean, obviously I'm preaching to the choir there. It's just the premise is awesome. Now the question is, how do we carry this forward? And just the short time that we have left, what's the vision of the future? How do we get this to become the operating system of Wall Street and the new economy?
That's a great question. I think about that 24/7. It is.
It's kind of what you get paid to think about,
we
right?
We have an awesome team, and they think about it every day, and we have an incredible board, and likewise. So, look, I think this is about one sort of step at a time. We want to build a brand first of all. We want to spread the word on what we're doing. We do lots of things to try and do that, and this podcast will hopefully help. And we appreciate the chance to come on and tell our story. I think, we want to celebrate leadership in the companies, and then we want to have the companies spread the word. We want to have the companies themselves say, we're a just company because this, that, and the other. Like, that's a major point of leverage. I think, we want to have an army of consumers, a movement around the country of people who are saying, yes, this is a better way to do business. And, this is useful to me in the way I go about my business, whether it's running a company or, working in a company or as a consumer or as an activist. I think data itself is tremendously leverageable. So, we want to empower anyone who cares about the future with our data. We want them to trust that we're developing the best available information and doing the best analysis. And then we want to have champions, people who do have a platform that can spread the word and really, sort of popularize this idea that there is another way. We don't have to swing from just unfettered shareholder primacy to just breaking up companies and high taxation of companies. No, we can do other things too, and we can leverage markets, to solve some of our problems as part of that overall approach. So, So I think 5 years from now, hopefully I'll be walking through Times Square and there'll be a 50-foot billboard with the Just Capital seal, which is a badge of honor that Just companies display. And, people are going to be using this for making investment, consumer and employment decisions as well.
I got one last question about some of the fundamentals of how you weigh your scores. So your scoring weight for you guys, workers 25, customers 18, products 14, environment 13, right? And so you ask a different guy on the street, for me, the environment might be 40, whereas jobs or workers, for a guy who's got that's his job. Maybe that does belong there. So how did you guys establish the scoring weight? And did that come from your surveys of the American population as well?
It did. So it all comes from the public. The way it's done is we got a representative sampling of the population. We did that with the National Opinion Research Center at the University of Chicago. They have the AmeriSpeak panel, which is managed and maintained to be fully mapped to census. And what that does is give us, as good a picture as you can get of the overall aggregate relative importance of those things. So that's what the percentages reflect. However, the reason we built the platform the way we did is because you care about the environment. We want you to be able to go on and in 2 clicks see how all of these companies are doing on the environmental issues that you care about. And maybe that's how you use Just Capital, and that's totally fine. You don't have to just come in and focus on all the other things that other people care about. You can focus on the things that only you care about, and use that in ways that matter to you. So that's the beauty of the platform that we're building. But we also, to your point, we want to put this back to the consumer. We don't want this to be about us. We don't want to be the ones picking the issues, and we don't want to be the ones picking what's important or how important they are relative to each other. That's all got to come from the public. And we think that grassroots, bottom-up movement is the way to really drive lasting change. This can't come out of some, expert model that we've developed in some, sidebar meeting at a conference. This has got to come from the public because that's who the markets serve. The markets are the public. So that's why we think this circularity of what we've created is actually pretty compelling and has a shot at driving real change.
I love it. For those of you who haven't looked it up yet, if you're driving or whatever, when you get home, justcapital.com. Poke around. A lot of interesting data, a lot of interesting compilation stuff that, someone's doing the work and these guys are doing it. There's obviously a lot of work to be done, but it's easy to talk about wanting to see change in the world. It's easy to talk about what people are doing wrong. But, once we could start quantifying and shifting this scoreboard, if you will, and using our capitalism to serve our intent, which is to, coexist and live on a planet and thrive and feed our families and educate them and do all the things that, we want to do peacefully. The real question is, okay, so what do we have to do to rethink this? And, if you want to make data-driven decisions, great. Look, here are the people that are industry leaders in this. Maybe I invest in them. Maybe I buy their products, or maybe I just keep an eye on it. That's up to you. The information's empowering. So I highly recommend taking a look at this. Martin, I'm so glad you're still at this. I'm so glad that this is winning and it's still going. And, hopefully 5 years from now, I look up and I see that billboard too. And I'm just like, I know that dude. This is great.
Well, I hope so too. And look, if anyone, I'm always interested in getting points of view on this. So anybody listening to this who wants to reach out, please, I invite you to do so. We are trying to build a movement. The companies that we track are never perfect. That's one of the things I want to leave people with is we're not saying Microsoft is perfect. There's lots of things they don't do well. They'd be the first to admit that. This is all about trying to create improvement and measure that along the way. And so, in that spirit, we sort of feel like If we get enough of us with our voices amplified and our dollars amplified, really trying to create these incentives, and companies will listen because, they want to be better. They want to do better because they know that it's in their long-term best interest. So that's what I would, that's my ask. And if anyone does see the billboard in a few years' time, let me know.
Yeah, take a selfie, send it our way.
Yeah.
Awesome. Martin, thank you so much. This has been insightful as always. Look, folks, this stuff matters, and just keep an eye on it. Turning a blind eye to money and the flow of money is really, money is energy as far as I'm concerned. And, the way we invest it, the way we spend it, what we do with it does matter, as you can see reflected in the world. So look at the scoreboard and be a part of this. Martin Whittaker, you're a hero. Keep it up. Look forward to catching up with you again in a few months' time. Let's keep this thing moving.
Thanks so much for the opportunity. Really appreciate it.
Thank you. All right, folks, I'll see you next time.